All right, traders, welcome to our special bonus session of live coverage of the non-farm payroll release coming up in about 14 minutes. Great to have you all here. So in the next 15 minutes, I'm going to walk you through what I do in front of a high impact, high volatility, high volume, and here's the key part, scheduled event. It's got to be scheduled, otherwise there's no way that traders can jockey around for position, and then there's no way that there can be sort of the boomerang effect, if you will. We send these trading ideas out into the ether, if you will, and then once we get the data result, whoosh, we get the reaction, and either traders who have quote unquote guessed right will enjoy the fruits of their labor, and traders who have guessed wrong will have to make sudden and oftentimes very quick and painful adjustments. We are not those traders. We are not going to guess. We are not going to play action in front of the non-farm payroll. Let the demolition derby happen in front of us. And then after the release, and it could be just moments after the release, we'll make a decision about what price action means to us in the reaction of, all right, this was the data we expected. This was the data that we got. All right, let me show you how I do some of this measurement. And again, we're going to get a couple different numbers. The most important, of course, is that non-farm payroll itself. How many jobs? That's the headline number, the actual payrolls. Unemployment rate is very important. I would say after that, the average hourly earnings and participation rate. Labor participation has been a bit of a problem in terms of what the Federal Reserve feels where it should be at. So we have a lot of data. This is a monster economic release that oftentimes ineffectively is reduced to 3 or 4 headline numbers. But in reality, it probably takes 12 to 15 minutes for the entirety of this beast of a data dump to be fully processed. I'd say easily 12 to 15 minutes for it to be digested, but obviously we'll get the immediate reaction within seconds, right? Okay, so there's a couple places I will go, whether that be trading economics here, whether that be Forex Factory. What's the number that's expected, right? Because that's the game. What do we expect? What did we get? And so we're expecting, let's see, 181,000. That's what we're expecting, really, 181. That's on Forex Factory. On Trading Economics, let's see, consensus is 180,000. There you go. Now, Forex Factory's forecast is for 190. This is where the game is played, gang. Sort of, there's the broad consensus, and then there's this whisper number play. Now, do you need to do this part? I like to, because mainly what this allows me to understand, just like if we're dealing with earnings, this allows me to understand where are the different groups of traders positioned, pre-positioned before the hot zone. Where are the expectations? How are they measuring whether they're right or wrong? So now I'm going to jump on over to Estimize. And I know that non-farm is buried here somewhere. There's a lot of different data here. Where is it? I'm sure it's right in front of me. I usually don't go here, but I did want to talk a little bit about it because, oh my gosh, I don't always clearly go here. And I just might. Am I losing my mind? Could be. Information tech, healthcare, basic materials, economics. Okay, let's see if I can't search it here. There we go. I was in the wrong tab. Doesn't that help if I look in the right tab? There we go. Change in non-farm payroll expectation. And so this is the game that we're playing. And I look at earnings data in the same way. Gang, the history of non-farm payroll is as irrelevant really as the history of earnings to predict what we're going to get in the future. Now, a 4-week rolling average does have some impact on what we think. What's the 4-week trend or the 4-quarter trend when you take a look at earnings? But that's not how the game is played. The game is played at the level of what is expected and what is the actual. And you can see here, wow, this is really interesting. The estimized number, which is sort of a crowdsourced number, it's more of a whisper number, not a typical consensus. It's a little bit lower. That's interesting to me. So what do you know so far? 180 from Forex Factory, 190 from from Trading Economics, and 175 here. What does this tell me? You might say, Rog, what does this even mean? It tells me there's a fairly wide opinion about where jobs are going to come in, somewhere between 175 and 190. So different groups of traders have put in sort of their bets based on 175 to 190. When the actual comes out, those are 175, 180, 190. Those are the numbers that the actual will be compared against to measure whether it's good or whether it's bad, right? I like the estimized number. I'm usually a fan of that one. So we'll see what happens. So I know that the range of sort of that whisper number is 175 on the low end to 190 on the high end, based on places I like to go look at it. By the way, if you're not used to, for those of you that haven't seen me do a live session before, I always keep notes running on the left-hand side of the margin. We keep our trading charts on the right. And so a lot of the ideas that I'm going to be going through for those of you that are new to a hot zone fade, you'll see I put some notes there on the left side. All right. Now here's the other thing to remember too. This is futures only, gang. This is really a futures. I say Forex, but you've got to trade a market that's open and liquid. So this is really futures, maybe Forex focused, right? So it's going to be, for me, I would recommend avoiding euro, dollar, so 6E or DX futures, the ZB, the ZN, the ZT. Leave the treasuries alone. They can be very volatile. And I would leave gold alone, relatedly. So no treasuries, no gold, and no currencies. Leave those aside. That leaves us with really two choices. What I like to focus on is ES and or NQ. Let's make it really simple. They're liquid, they're accessible. And remember, it's futures focused this time of day. So again, yeah, no SPY, no QQQ. It's 8:30 in the morning Eastern, right? Okay, so futures focused. By the way, remember, MES and MNQ, those are the micros, and are an excellent choice, right? Especially if you're just getting into trading high impact events. This is riskier, gang. We are going to be looking at usually the higher end of historical volatility, which brings me to the tools on my chart. Right now, I know that the S&P, remember we had that, what's that? Lauren and I were talking about that fruit company. I think there was some fruit company that reported yesterday after the bell. How do they do with their fruits, right? A little bit of that is going to be discounted. So we do have the aftermath, right, of Apple. We also have, in some ways, the aftermath of the ECB yesterday, the European Central Bank, although that was first thing in the morning, but I don't underestimate that either. And then we have all the jockeying around for position for non-farm. But in the aftermath of the ECB, in the aftermath of Apple, the S&P is above the line of the sand. It's well above the previous session close. Let's take a look at the NAS. And so now I've just narrowed it down to two symbols. And now I've got NAS, again, well above the line of the sand. So both ES, here we go, ES and NQ are above, again, that line in the sand. Yes, I do try to use a little bit of abbreviation because I do a lot of typing while I'm trading every day. So again, line of the sand, the previous session close, where largely the sentiment is if we're above it, kind of the bullish side of things, if we're below it, the bearish side of things. All right, so that's now I've got at least some bearing as to which direction I'd rather trade in. I'd rather be long, which means I need some weakness. All right, so the next question is, all right, Rob, where do we get in? What's the plan? Higher volatility for this time of day gives me a couple choices. We are above the 200 on the 5-minute. Now, I'm going to use the 5-minute chart for this, gang. Although the hourly price movement ranges, the green and the red zones, these are tools that I created well over a decade ago. It's a process that I created well over a decade ago that we've continued to automate, and we've changed the way we're curating the data. This is the most accurate version of a tool that I've been using in some form or fashion as it's been evolving for over a decade now. And it's based on historical volatility, right? And I'm looking at the typical movement, not for the day, but for this particular hour, 8 to 9, 9 to 10, 10 to 11 Eastern. So each hour has its volatility characteristics. That's what that red and green zone identifies. Red is resistance, green is support. All right. So some really good basics here as we cover NFP. Again, please let me reiterate, this is not something that brand new day traders, brand new futures traders should do. Please watch it because the process is going to apply to every kind of high impact, high volatility, high volume event that's scheduled, AKA what I have called hot zones. All right. I'd rather be a buyer. So that means I'm going to park limit orders to buy down in the green zone. So that's going to put me at basically the area of 13,058 to 12,980, right? So that's my ES limit buy zone. That's where I'd rather be. Now we can do something called bracket. Bracket means I can place a limit. Oh, that's the NQ. Sorry. I can place limit orders to buy and limit orders to sell. Whichever gets hit first becomes the entry, and the second one can basically become a second target. So I don't mind to park limit orders above and below where current price is based on these green zones. So 40.85. So I'm going to place limit orders to buy 40.85 to 40.65. All right. And then the limit sells. But let's say we shoot up and then move down. Again, gang, please remember, if you don't have a high risk tolerance, right, this is not the kind of trading I would encourage because this could go very well. This could go very badly, very quickly as well. Please let me make that really clear. So that's the ES, limit orders to sell. And here's my NQ. Okay. So again, I'm focused on just the indices here. All right. So ES and Q, and then here's my limit orders to sell. And you notice all I'm doing is I'm grabbing my cursor, taking a look at these pre-calculated levels. It's got to be before the release. So limit resistance is up at 13.2 on the NQ, extends up to 13.280. Now, you'll notice that the box that we're dealing with, the volatility of this hour, 8 to 9 a.m., that zone is wider than the ones that preceded it. Well, of course, because if you look at historical volatility between 8 and 9 a.m., and then the middle is, when I look at the range, the middle of the range is the target. So 13,130. Okay, for the NQ. And then lastly, let's see what we want for the ES. Yeah, I like 4105. So my NQ, do not place the targets as limits at the moment because you have not entered anything. We have not entered anything, right? So T1 is at midpoint. I call it the Pingala. Fibonacci numbers, they're Pingala. So I cut the range in half like a sandwich and off we go. Now, I also want to say, do I want to short? I really don't. Okay. So this is really going to be second target, right? So if you're wondering, hey, Rog, I've been following you for a while. I know what that multi-trend is saying. Multi-trend saying for the ES, it's a buy only. Yes. NQ could be buy or short. ES is buy only. All right. Because the underlying trend of the 5-minute for the ES is up. It's neutral for the NQ. All right. So now we wait. Here's the initial, we're 12 seconds in. Now, this level right here, my Sector Secrets Mastery folks, you know that 200 propulsion well. For this kind of event, probably not something that I want to focus on. Some of you might be wondering, Ron, what about the least for the Yes. Under any other circumstance, I'd probably be open to this anchored VWAP. This is the 2 a.m. anchored VWAP. Under any other circumstance, I might be open to the least. This is a high impact event, gang. Make the market travel, make it move to the zone that you want, because the idea is to capture exhaustion. All right. That's the main idea, to capture exhaustion. Now, the 200 propulsion, these 200 dots is a 200 period propulsion, different than an exponential moving average only, different than a simple moving average. It's a few things that we're looking for. It's mostly at 8 and 200 exponential moving average cross. I do like that, but again, for this event, that would be a buy, right? But for this event, I'd rather be a little bit more conservative. But I know some of my sector secrets folk might be saying, Rod, we got a 200 propulsion in an uptrend. I'm fine with that. Notice, gang, I have no idea. And I know a few of you are saying, hey, gang, or hey, Rod, this is the number. I have no idea what the number is. That's not the primary consideration. I'm measuring the reaction via price. And I'm even, oh, there it is. Okay. So our employment rate is 3.4 versus 3.6. The non-farm is 253 versus 180. Now, remember, is this quote unquote good? Anywhere from that 175 to 190, this is far in excess of that. Remember, gang, we are still in good data is bearish for stonks, right? So good data, this is what we're getting. This would be considered good. It's bearish for stocks, okay? We're still in that environment. Why? Because I'm sure Jerome's saying, all right, good data. I can justify another rate hike because, I'm not killing the economy. Although headline non-farm is not the only game right now, okay? It is not the only game right now. He's got to keep an eye on that, on the labor productivity and things like that as well. All right, but I would focus on the long side based on the move lower. All right, so you see the ES and the NQ. The 200 propulsion, very tempting. And let's see here. So close. So you might say, let's see, what do we have here as a low? 13,085. All right. Not low enough for me, gang. Not low enough. Do you realize how sedate this NFP release is 3 minutes in? This is not a wild NFP, gang, because these zones account for what we typically see for 6 months preceding today. So today, this is a very, very sedate non-farm payroll release. You can see that we've barely escaped the range that we had in pre-market since 2 a.m. But I'd still be willing to be a buyer in the green zone, most especially on the S&P and also on the NASDAQ, again, above the line in the sand. A trend that preceded the current chop was up. I definitely have a bullish bias. So 3 minutes after NFP, I still have a bullish bias. So I am still fine with letting those limit orders to the long side trigger an entry. So another question I get is, okay, Rog, once we've gotten sort of that initial whoa reaction, 3 to 5 minutes later, can we readjust our hourly price movement ranges to the zones? Yes. So at 8:35, 8:34, even as early as 8:33, I will look at the HPMR zones, both green and red, and modify the limit orders, right? Modify the limit orders to the current zone prices. That is another thing we can do. So that would mean that, for example, on the NQ, here we go, NQ, this is now 13,075 down to basically 13,000, right? So the initial reaction, I want to be a buyer, which I think overall is still the right thing to do. You saw the reasons we chose that well before the reaction. And then now that we have the reaction, as the dust settles, I'll give it 3 to 5 minutes. I can make some new decisions about what I want to do. And that's going to move my ES down to 1486 or 4086 to 40, basically 4067. Right? And that's what I've got going forward from 8:35. Yeah. So I'll re-examine, we'll recalibrate. And this might end up being a big cup of nope for either direction, gang. And that's okay, because if we start off each and every uh, trading day saying, you know what, flat is a position, it's not long or short, it's not how quick can I get into the market. We had a directional bias, it was to the long side. For those of you that decided, okay, Rog, I want to buy weakness, if you did, you're probably doing all right. The 200 propulsion ended up being pretty good, but kind of aggressive. And I think the long bias was the best one to have. But I did not get to my zones. And that's the kind of discipline I believe you need to trade non-farm. But don't be disheartened. What you have now is a process that you can use for GDP, PCE, CPI, initial claims, you name it. Any one of these alphabet soup releases that happens at 8:30, and heck, happens during any time of the day, but most definitely this time in morning, you now have a process. And this is what I've been doing for many, many years. It just is a process of, and I love this image, and I hope this resonates with you all, because it really is what I believe trading to be, which is a lot of waiting. Trading is waiting. I know for a lot of traders, that's pretty intolerable. But I do believe after just crunching the numbers, almost 35 years, trading is waiting. And it's this. It's Ted, right? Staring down the pitcher, waiting for the pitch, knowing where that ball has to be over the plate in order to have that batting average, right? And so trading is waiting. Not every move is going to be best for every trader. And that's a tough thing for a lot of traders to accept. I know it was for me early on. Oh, wait a minute, that person's making money in that move, but it just didn't work for the setups that I use, right? Okay. Let's see what else we have here. So I'm going to catch up on some questions here. All right. So on the ES, is it only buy orders? Yes. So we did cover that after I went through and gave all the levels. I wanted to look at the read of the multi-trend closer to the release, right? And yes, the ES is only buy levels, and I put that in the notes, right? So what I want to do in the ES is yes, and I do believe we covered that right before. Yes. So the NQ could have been either way. N could have been either way, right? So NQ could have been either way. And then as we went through all the numbers, and you can take a look at the notes and check out the replay later on if you'd like. As we went through all the levels and then really close to the hot zone, the S&P was still green. So S&P was buy only. Okay. So I hope that makes sense. I think that question was from Paul Joseph. Paul Joseph, that makes sense? Yeah. Karthik says, good is bad is bad, nothing is great. You know what it reminds me of? Oh my gosh. Huey Lewis and the News. I'm totally dating myself right now. Remember when they did that a cappella song? It was actually a pretty big hit. And Huey sings, sometimes bad is bad. Yeah. Now there's your earworm for the morning. It's actually a nice little tune. So yeah, sometimes I think about Huey Lewis, and sometimes bad is bad, but not yet. Sometimes bad is good. So that's where we are right now. What is the expiration time for the hourly price movement range? I would like the trade to trigger based on the immediate volatility, Jane, within about 3 minutes. Within about 3 minutes. Ruggs, I hear you. Ruggs says the market's on volume. Considering the range that we went into, the number that we got, here's where the number is so darn good, right? They don't know what to, including me. We didn't go to either end of these zones. Very sedate. I agree. Now, let's take a look at another place where it's really important to understand how this is being measured. And this is, now we're entering Powell's world. Now we're entering macro. And I've gotten some feedback from folks who say, Rod, why do you keep saying that Powell's going to cut rates? Gang, I'm not saying it. What I'm doing, I think I was reading a comment from maybe Charts and Coffee or something the other day. I'm not saying it, gang. I'm looking at Fed fund futures. I'm looking at a futures contract where people actually have to spend money to place their bet, unlike television, where people just get to flap their gums and express an opinion. Here, people have to buy and sell with real dollars, right? A futures contract called the Fed fund futures. And based on that participation, albeit a very thin contract, this is what they are saying. And believe me, gang, Powell knows. He's not oblivious to where Fed fund futures are at. He's not oblivious to where target rate probabilities are at. He knew he had a green light to hike on Wednesday. We were already bracing for it. Of course, he was going to hike. He wants to be able to hike. So when people say, oh, they're going to cut or hold, that's just not based on the data at all, right? So I saw a lot of folks out there saying, oh, they're going to cut or hold. Based on what? I'm going to go back to the Fed fund futures. If Powell gets a green light to hike, if for whatever reason, come June or come July, we start to see the 5.25 to 5.5 column start to get taller, believe me, he's going to hike. He's going to take that opportunity to say, we as a trading and investing public expressing our opinion into these Fed fund futures, we are maybe not happy about it, but we're expecting it. Now, flip it around. Powell is absolutely probably ticked off, but he's crystal clear about this. These are Fed fund futures after non-farm. How did traders and investors take that data and look at it and say, all right, what's Powell going to do next? Powell is the only macro that matters, gang. What we've done now, I say we, right? Collectively, the trading and investing public. We have now said you're going to cut in September, and you're going to already have potentially cut in September, and then you're going to cut again in November. Here's what's interesting. This is the way it looked on Wednesday. Powell knows this. Believe me, when he opens his Bloomberg terminal up, you can see this. The fact that he did not course correct this expectation when he clearly could have on Wednesday during the presser tells us a lot. It doesn't mean he's going to cut. I don't know what he's going to do. Nobody does, right? But we can look at the data and say, if Powell wants to course correct this rather dovish tilt on the Fed fund futures, he can and he potentially will. But the fact that he hasn't yet means that some part of the process is open to cuts. So you've got to look inside the numbers. You've got to look below the sort of headline statements. And this is where a lot of people are saying, Rod, why do you keep pushing the cut agenda? I'm not. I'm reading the data, right? And maybe that's really where the confusion is, because most folks just want to tell stories based on no data at all, right? This is where we want to say, this is what we're expecting. This is what's being communicated to Powell. And then now we'll go forward thinking that come September or November, we're going to get that Fed pivot until Powell decides in some capacity, in some format, doesn't need to be in an FOMC event. It could be at some random speech to course correct these doves who are just piling into this narrative that the second half of the year, 1 to 2 quarter point cuts. All right. So any of the cuts for July are bonkers. We are very likely going to hold through summer. And I would expect either September or November, we'll see the pivot, again, based on the data. All right. So that's the way the overall data spilling out. That's the way non-farm affected that data, right? That's how Fed fund futures adjusted based on this pretty big NFP number. All right. And that's it. That's it. So there's the macro to it. There's the zones to it. I want to be a buyer. By the way, gang, what we have oftentimes after 9:30 is an echo, because remember, stock traders really can't access this. Stock options, ETFs. So when we get to 9:30, there's a whole new group of traders who get to say, okay, now we get to react to what happened with NFP. And oftentimes it's going to be an echo of what we saw at 8:30 happen at 9:30. Okay. And that's what we want to focus on as we go into the open. Am I going to be bullish? Have any of these early assessments changed in terms of the strategy and what I'm looking at? No. Looks like the ES is trying to go back into an uptrend. If we reestablish the green trend over the course of 2 5-minute candles, I'll go right back to buy only. And then the NQ, if it can turn into an uptrend, we'll go into buy only. But right now it's neutral, so I could short. This is interesting, gang. The bond yields dropped. And this would have been a fantastic opportunity for potentially a buy. But this is odd, and we've seen a lot of this. We're seeing this very odd. Yields are moving higher as Fed fund futures are moving lower. I would say right now, in the very prickly area of a non-farm payroll and what's the Federal Reserve going to do about it, check out ZT, not ZB, right? ZT, not ZB. And that's where the near-term yields, they're up too. So that's it, gang. That's it. So any other questions for me? And my Sector Secrets Mastery folks, I'll be with you all at 9:20, and I'm happy to go through some of the questions here. So let's see. So again, if you watch the replay, I'm always going to go through, what am I going to do? I'm going to find the zones, right? I'm going to find the zones. And Paul Joseph said, I did not correct myself, my friend. What I like to do, so listen up, everyone. What we want to do is that last 5 minutes, find the zones. It's got to be before the release, right? Find the zones. And then at the very last moment, look at the underlying multi-trend, because the NASDAQ could have gone green or red at the last moment in the last 5 to 10, well, really the last 10 minutes. The S&P as well. So I'm going to look at the zones in a very neutral way, and then I'm going to take the read as the last thing I do. It doesn't have to be in that order, but when things are sort of the way they are right now, where the NASDAQ was neutral, but the S&P was up, all right, that's where I will make those adjustments. All right. So follow the process, however you do it, whether it's multi-trend first and then the zones later, and then pick it. Now, remember, as I also said, you can park both limit orders to sell and to buy, because what they're going to end up doing is one is going to be the entry, the other is going to be a second target. So it's more important to get those levels out there and then determine whether or not you need to cancel or modify, or whether or not we do have directional bias. But I have found, especially when NASDAQ is neutral and S&P is bullish or vice versa, take that multi-trend reading as late as you can in the process. And hopefully that clears up any confusion there, Paul Joseph. All right, next up is, I see some folks telling Fed will need 2 more hikes. And hey, that's great. Play that out. I'm always going to play the data. You know, that's what we're going to focus on. Not here to tell the future, right? We always want to look at what it is we are braced for or expecting, right? And then that is the reaction to the data. That's the reaction to Powell. If Powell sounds dovish and we're already dovish, great, that's a confirmation. If we're dovish and Powell comes around hawkish, there's going to be your drama and the equity sell-off and the bond yields moving and the volatility, right? It's always, what are we braced for? What are we discounting? What are we baking into the cake versus what really happens, okay? That much I can tell you. The game of trading is not a predictive sport. I can promise you that. All right, gang. As always, thank you so much for joining me. I hope this session was insightful. This is my process. That's it, right? And I hope that you'll see it's a repeating process. So whether we come back, actually, if you go back and check the PCE, you'll see we did pretty much the same thing. Same thing. I focused on ES and NQ. We found the 2 zones and we waited, right? And it's okay when we don't reach the zone, because that's kind of by design, unless we get enough exhaustion where the market's traveled far enough to no longer have sellers dominating price action, or buyers, whichever way we're going. We want that exhaustion. It looks like the 200 propulsion really did its job, but I'm even more pleased that, do you see how the directional bias is so important? Choosing a side, not being completely neutral, but being a little bit more bullish than bearish, it does help. It was easy to be bullish on the S&P, a little bit more neutral on the NAS. One thing you can do with that information is say, you know what? If I'm a little bit more clearly bullish on the S&P, let me then remove the NAS from contention, right? So there's all sorts of filters you can have with this process. And I hope this was a good, transparent look into it during a high volatility event. All right, gang. And by the way, those of you that are catching this on YouTube, want to see what we do in the Sector Secrets Mastery Room, come check it out, sectorsecrets.com. All right, gang. Charts and Coffee is up in about 10 minutes at the top of the hour. It will not be in this session. You'll have to go back to the YouTube channel for the Charts and Coffee play. And my Sector Secrets Mastery folks, yeah, type in whatever questions you have from this session. When I get into the room with just us at 20 after, I am happy to cover those questions. All right, gang. Until then.